Hey everybody, it's Joshua Gaiman with joshuagaiman.com. The link below me, you can go to the blog, you can like us on Facebook. So let's interact that way. That's probably a lot of fun if you're on those things. Leave a comment, let me know what you think of the video. And if you like the content, maybe subscribe to the channel. Last week I got a pretty good feedback from everybody and I wanted to really say thank you. I appreciate that. We saw some crazy things happen this week. Big shocker there, of course. It seems that every week is crazy these days, and really that's just the new normal. But anyways, after we saw gold and silver take that huge plummet last week, we didn't really see them go up any this week. Silver right now, we got about an hour or two left in trading. I'm actually not sure what time it is right now. 12, I think. Anyways, maybe 1. The silver's down 29.75, gold's around 16.15, 16.20 last I looked, and the only thing that's up is the dollar. And this is crazy. This goes against what I've been saying for the last couple of years. Well, no, what I've been saying is still true. They're printing more and more money and expanding the money supply, and this is devaluing the dollar and raising the value of precious metals like gold and silver. But what's going on in the short term is the people that issue those paper notes, the Federal Reserve and the central banks, are doing everything that they can to preserve the system, because the dollar represents debt, and on a global scale for the entire world, because since 1944 and the Bretton Woods Act, everything's been attached to the dollar, so the dollar's been as good as gold. Well, it's not as good as gold anymore because we just keep printing more and more of it. So debt to other foreign investors and other countries is diminished when we just print more and more of the paper notes. So long term, the trend's still the same. And when we see these dips like this is when we need to be picking up and acquiring the real money, because we can get more of it for the same amount of notes, right? So silver's down, gold's down, the dollar's up, and in the short term, those people, they're going to do whatever they can, like I said, to prop the dollar up. So what do they do to do these things? Well, we saw Operation Twist came out, and it's almost like the Federal Reserve doesn't want to help the economy right now. They want it to get worse so that we can beg for quantitative easing, because right now quantitative easing has a real bad name, kind of, because 1 and 2 haven't really done much. And so they're going to have to unload a quantitative easing number 3, QE3, but they want us to want it when they do it. They don't want us to uproar and riot when they do it. So right now they need to bring us to our knees so that we'll beg for QE3. I mean, that's their perspective, as sick and disgusting as it is. So I think that's what's going on. They unloaded Operation Twist, which is just a joke. They're just saying we're going to buy long-term mortgages and sell off short-term mortgages so that people can refinance their house. Well, that's not really going to help anybody. Nobody can qualify for a mortgage right now anyways. That's not going to help the economy. So they're doing things to act like they're helping, but really they want the economy to keep crumbling, I believe, right now, so that they can, it's all just a game to them to preserve the debt system as long as possible. But like I said, what are they doing right now? What's actually working? Because we did see them combat the price of precious metals. Well, there's a couple things I think going on right now. I talked last week about margin requirements and how they've been manipulating the price of gold and silver with those. When they raise margin requirements, people have to invest more money into their accounts or they have to sell out. Now we're talking about ETFs, so paper like stocks and stuff like that, in relation to gold and silver. Not people that are buying physical gold and silver, but people that are investing in it, like with Wall Street. When they raise the margin requirements, then the COMEX did that, then people have to either sell off or increase their deposit into their accounts. So that's one thing that happened here last month, and this is a commenter on last week's video brought this to my attention, so thank you for that. Hope you're watching again. Let me know if you are. Chavez, he ordered all of the gold back to the Venezuelan vaults, and so I think right now they're still in the process of moving, because I mean it's like I think it might have been even over 100 trillion. I'm sorry, not 100 trillion, over 100 tons of physical gold getting shipped back from Europe and the States to Venezuela. So what happens, there's more paper, gold and silver out there, especially silver with the JP Morgan thing going on, than in the paper markets than physically exists, right? So what happens when the price is at $50 a silver, $40 a silver, and one of these countries decides to bring back 100 tons of that physical commodity? That means there's that much less, 100 tons less of physical gold in the market, which you would think would maybe increase the price of it because the demand would go up. Long term, you're right, yes, but in the short term, all of those, and this is why I don't like derivatives, because the stock market's a derivative of real things. All of those paper notes, people that invested in gold and silver in the market, those positions have to be covered. If they have to pay everybody back, if everybody cashed in, they have to be able to cover that. I'm not sure what the reserve ratio is what the people that issue, like the COMEX holds, but they have to cover that. So with the margin requirements, everybody happening right after Hugo Chavez ordered the gold, by the way, everybody sells off the gold, plunges the price. Now they're able to cover it because if people turn in their silver, they don't have to pay them back as much for the physical silver now that the price has dropped. So that's kind of interesting. So like I said, long term it's still going to go up. But right now, people just don't know what to invest in. With the markets being so shaky and the economy being so bad, with growth being terrible, trade being terrible, unemployment being terrible. I mean, we're at like 23% if you look at real unemployment, which factors in not just the people that are not working, but the people that are underemployed and also the people that have been out of work for 6 months or more. You count all those people, we're at 23% unemployment. It's freaking disgusting. And the people that do have money, getting back to my point, is that they don't know what to do with it right now. What do they put it in right now? So it's probably not the wisest thing, in my opinion, financially. They should be putting that money in gold and silver, especially why they can acquire it cheap right now. The reality is a lot of them are putting it into dollars, just holding a cash position right now, and that's boosting up the price of the dollar in the short term as well. So hope that explains a little bit about what's going on right now. Hope you learned something. Like I said, leave me a comment, leave me a feedback, leave me links to your videos so I can see your responses, other videos that are similar, and let's chat it up. Have a great week. We'll talk to you soon.